Welcome back. Happiest Minds has chalked out their 10-year plan where they aim to achieve $10 billion in revenues with industry-leading profitability and capital return ratios. Joseph Anantharaju, Executive Vice Chairman and Chief Executive Officer, Product Engineering Services at Happiest Minds, and Venkataraman Narayanan, Managing Director and Chief Financial Officer at Happiest Minds, are joining in to take some questions on what they're seeing out there. Gentlemen, great to have both of you here on CNBC TV 18. Prashant this side. Joseph, if I can start by asking you, very recently we are starting to see signs of slowdown in terms of tech spending. If you talk about startups, etc., there is more and more evidence, anecdotally, but also sometimes, it's actually happening on the ground. Startup funding, etc., starting to dry up at the margin. Could you tell us how much work do you do as far as startups go, and if you're starting to see the impact of some of what I described out there? Go on.
Sure. The last 3 months I've been traveling quite frequently, almost every week, trying to get a sense how customers are viewing the market and managing the budgets. I must say that at a broad level, we've not seen any drop-off in demand. Specific to startups, I would broadly classify startups into well-funded or slightly advanced stage startups, and those were in the early stages and having higher cash losses. So we don't have any customers in that segment. We have customers who are like Series B, C, D, and they're sustaining their spend on their product initiatives. With the other customers, 96% of our business comes from digital, and we're not seeing any drop-off in spend on digital initiatives, around cloud, AI, ML, automation, because they're very necessary for customers to sustain their growth. What we're seeing is a little bit of movement of money or budget into higher priority items while keeping the overall spend at the same level. But having said that, customers are keeping a close watch on both the political and macroeconomic front.
Joseph, early stage exposure is very low. You said you don't have exposure there, but what gets bunched up into startups? What's your exposure, revenue exposure from that segment?
I would say from the startup below, let's say $50 million of revenue, it would be around 8% or so our overall exposure.
Okay, $50 million of revenue.
Revenue less than that. That's what I would classify in the startups, sure, which are still to sort of get beyond their financial stability phase.
Okay. Around 8% or so. Go on. Sorry.
Okay. Venkataraman Narayanan is also with us. Venkat, just talking a little bit about the the way forward for the company. You have spoken about achieving industry-leading capital return ratios in the next 10 years. Can you just tell us what is the current situation right now? Your return on capital employed is about 40%, return on equity is about 27%. How will this gradually improve and to what level? Venkat, we can't hear you. I think you're on mute.
Okay, sorry. Good morning, Sonia.
Morning. Go ahead.
Good morning to all the viewers. See, we already are on the top of the pack with respect to the capital return ratios that you just called out at 40% ROCE and 27% ROE. When we look at our competitors, we are pretty much on the top of the pack. Our focus will be to maintain these numbers at these levels, and that's one of the vision statements that we have laid out as part of our 10-year growth plan. So we are very focused on maybe these metrics, which are maybe a passé nowadays in these days of, where people only talk about annual run rate and talk about revenues in the startup context. Return ratios are kind of something which is passé, but we are very focused on that because that's the real return for shareholders.
Is there going to be any pricing pressure at all, Venkat, in your opinion? Joseph told us that in terms of slowdown, etc., there isn't very much, but on pricing and you having to accommodate more work in the same cost, are you seeing some of that?
We have not had any request from any of our customers for a price reduction. So that's out of the equation right now. Now we are talking about price increases. As far as price increases are concerned, like I've said earlier in my interviews with CNBC, we in discussion with customers, we are able to increase our prices for the technologies that we deliver our services on. So it's essentially services which command a premium, both in terms of wage rate and in terms of market demand. We are able to, in discussion with the customer, get price increases. And this is something on an organized basis we started in Q2 of last year. And we have seen good traction with respect to be able to get price increases for our services. So that's on the price part. As far as demand, I think Joseph has covered that pretty well with respect to seeing no drop in demand as far as digital services are concerned.
Joseph, to achieve this $1 billion target that you have of revenues in the next 10 years, I'm sure acquisitions feature in that list. Can you tell us in this fiscal, in FY23, are you looking at any acquisitions closely? If yes, which are the areas where you see growth potential?
Yeah, we will have to get some acquisition and inorganic element to achieve our growth, as you pointed out, Sonia. And this has been a very focused initiative that Venkat and I have with the rest of the executive board. We've been running for whole of last year. We are looking at companies that are in the digital space, maybe in the automation, low code, no code, analytics, AI, security. These are some of the areas that we are looking for companies that can bolt on growth, and not just for revenue accretion, but that can act as a catalyst for our growth. But at the same time, what we want to do is to do a very careful analysis and make sure that we buy at the right rate and get value from these acquisitions.
Venkat, in the con call, you made a statement, and I quote, we aspire to be in the top 3 of comparable companies in the index of EBITDA and revenue growth through the whole decade. Could you tell us which are these top 3 companies that you refer to? What are the revenue and EBITDA aspirations by the end of 2030?
So we are currently at about 66%. That's 67%. We did 41% growth last year, and our EBITDA was about 26%. So 67, 68% is that metric that we talked about. Our comparator companies are not only Indian IT services companies, mid-size, large-size IT services company. We are also including EPAM, Globant, Endeavor, the larger digital peers to us while we look at this number. This metric is something which is typically taken into account by SaaS companies, but we believe that the profitable growth is what we need to track for the next 10 years. And this is a good metric to make sure that we are not only growing, we are also being profitable. So that's how this metric came up, and it's part of our vision statement.
Okay, Joseph was also talking about the acquisitions in automation, in AI analytics, and all of these can act as the big growth triggers for the company. Venkat, anything in this fiscal itself which you all have narrowed down?
Yeah, we are very seriously looking at acquisitions, Sonia. But acquisitions are binary. You give out an offer and then it happens, doesn't happen. So it's a 0-1 kind of a situation. We came tantalizingly close to a couple of these instances during the last 12 to 14 months. And we continue to plug away at that and very focused on that. Just that we talked about capital return ratios in the first part of my session with you. And acquisitions, when we do it, we have to be very careful not to damage or not to affect capital return ratios. So we are very careful. And there was, I don't want to use the word bubble, but there was an effervescence in the market in the last 12 to 18 months or even 24 months with respect to valuations. And we are seeing some bit of realism come in on that front. And the likelihood of finding a good company from a culture standpoint, technology standpoint, I think has just increased. And with our push to close something ASAP, I think we should see success in that very soon, Sonia.
Okay, and I hope you're the first to hear about it as and when it happens, right? Since you said you're looking to close it as soon as possible. Tell us a little bit more about your investments, because you have capacity that you're adding in your existing locations, Noida, Pune, Bengaluru. You're opening up presence in Bhubaneswar as well. Joseph, right, what would the investments be that you're looking at, and any more light that you can throw on this?
So one investment, obviously, as you pointed out, Sonia, is in the people space, and we are going to expand in Noida and Pune, and Bhubaneswar is an area where we think we can get some very good talent, because the growth in the IT industry and 5PS Minds will be driven by talent and people. So that's one area. Second is, we'll continue investing in a lot of training, upskilling, and multi-skilling for our people. And so we're drawing up initiatives and investments for that. The third is building more depth in our domain and vertical capability. We've identified around 7 verticals that we're going to focus on, and we've got domain heads for most of these verticals. We should have a couple more come on board soon, and we want to bring in SMEs, build domain strengths in these. And the last I would say is we're looking at some of the newer technologies around Web 3.0, Metaverse, which we think will drive demand in the near to midterm future. So we want to be prepared, building a little bit of solutions ourselves, demo use cases, maybe work with customers on joint development on for some of these use cases. So in the current year, these are the areas where we see investments being made, Sonia.
Hope you achieve your vision and the 10-year plan that you've laid out for the company and for yourselves. We'll keep revisiting this plan for sure, and get back to us as and when you narrow down on that acquisition. Venkat and Joseph, thanks a lot for stopping by and speaking to CNBC TV 18. Well, for the market, it's still very, very quiet right now, so not too much happening really. In terms of individual stocks, Hero MotoCorp, Apollo Hospitals, HDFC Life, SBI